A short iron condor is an income strategy that aims to profit when a stock stays within a specified range over the course of the trade. The trade is composed of 4 options with the same expiration. A long put far out of the money. A short put closer to the money. A long call far out of the money. A short call closer to the money. The maximum profit is limited to the premium received while the maximum potential loss is also capped. To calculate the maximum loss, take the difference in the strike prices of the long and short options, and subtract the premium received. Traders should have a neutral outlook on the stock and ideally look to enter when the stock has a high implied volatility rank. Some interesting iron condor trades on stocks such as MSFT, INTC, AAPL, AMZN, and T. Most of the results are very short-term trades and may not be suitable for all traders. These companies also report earnings over the next few days, which makes iron condors very risky despite the post-earnings for crush. Using the February 18th expiry, the trade would involve selling the 210 put and buying the 200 put. Then on the calls, selling the 220 call and buying the 230 call. The price for the condor is $5.05, which means the trader would receive $505 into their account. The maximum risk is $495 for a total profit potential of 102.02% with a probability of 61.2%. The profit zone ranges between 204.95 and 225.05. This can be calculated by taking the short strikes and adding or subtracting the premium received. As both spreads are $10 wide, the maximum risk in the trade is 10 to 5.05 x 100 equals $495. Therefore, if we take the premium, $505, divided by the maximum risk, $495, we see that this iron condor trade has the potential to return 102.02%. The technical opinion rating is 88% sell with the strongest short-term outlook on maintaining the current direction. TGT is showing an 4 percentile of 84% and an 4 rank of 56%. The current level of implied volatility is 31% compared to a 52-week high of 42% and a low of 16%. The second iron condor on the list is an Orcl Condor, also for February 18th expiration. The Orcl Condor has a lower maximum profit in percentage terms at 60.26%. This example involves selling the 80 put and buying the 75 put, then selling the 85 call and buying the 90 call. The maximum profit potential is $188 with maximum risk of $312. However, the stock would need to land in a pretty narrow range between 80 and 85 to achieve the full profit. The total profit zone ranges between 78.12 and 86.88. The technical opinion rating is a 56% sell with a strengthening short-term outlook on maintaining the current direction. Orcl is showing an 4 percentile of 89% and an 4 rank of 60%. The current level of implied volatility is 31% compared to a 52-week high of 39.66% and a low of 18.89%. Mitigating risk. Thankfully, iron condors are risk-defined trades, so they have some built-in risk management. The most the TGT example can lose is $495, while the Orcl Condor has risk of $1,312. For each trade, consider setting a stop loss of 30% of the max loss. Iron condors can also contain early assignment risk, so be mindful of that if the stock breaks through the short strike and it's getting close to expiry.